Hey everyone, this is John Feneck with the Feneck Commodities Report, and with me today is my YouTube partner, Don Durrett, founder of goldstockdata.com. Don, how's it going today?
Good. Yeah, I'm ready to do another one. Let's do it.
All right. So we're doing these about twice a month now, and we've received a lot of positive feedback. We're thankful for that from the investor base. A lot of that is coming, believe it or not, from different avenues than just YouTube. We're getting like hundreds of comments on Spotify now and different things. So I think this market is really getting heated up for the junior market. We'll get into that in a minute, and we'll introduce our guest in about 15 minutes. But Don, why don't we kick it off with tariff news? We just saw Japan and South Korea get hammered today with 25% levies. I mean, this is, Besant is over the weekend saying we're going to do this stuff. And I don't think the market really is believing him or Trump, and it's hilarious because these guys mean business. What do you think?
I've been saying this for since August 2nd that this is Trump's strategy, that this isn't really negotiations, that this is literally his strategy, that his strategy is to leverage the US market using tariffs to generate revenue to put less pressure on the budget deficit and less pressure on the bond market. And he has to take pressure off of that because the pressure keeps building and building, and he sees it. Washington wants him to ignore that pressure. Washington wants him to kind of do with a BBB. They like that, where all they do is spend, right? It was a spending bill, it wasn't a cutting bill. And that's what Washington wants him to do. But he's like, okay, I don't mind spending, but I also need some revenue, which so Washington won't increase taxes. His base won't let him increase taxes. So he's raising taxes via tariffs. That's tariffs is a tax, and
Mhm.
so that's how he's raising taxes. This is a I've said this is a significant tax increase, um, and I've said that we're going to get shock number two, and I think this week is shock number two. I mean, he basically declared a trade war with Canada last week where he said we're not going to negotiate with you guys anymore until you're ready to negotiate, kind of thing. And then today declared a trade war with Japan and South Korea, two of our larger Asian trading partners. Um, People think that they're calling him Mr. Taco. Trump always chickens out, and I'm saying you're not reading him right. He knew that these tariffs are going to be severe, but he knew he needed some time to see if he could get some trade deals in. But this wasn't about backing down. This was about just he needed a little bit of time. He needed a few months to see who would negotiate and who wouldn't. Try to get a couple deals. But these deals, we saw this with all of his deals so far. It's historic, and this is what Wall Street's ignoring, is that historically, when you do a trade deal, it's even Steven. You do this, we do that kind of thing. It's not a one-way trade deal. That's not what negotiations is, But that's what Trump's doing. It's historic. Basically what he did with England and Great Britain. That was kind of a tell. That's like one of our, number one trading partners. He went in there and basically said, "Okay, this is how much you're going to charge us, and this is how much we're going to get," right? And it was basically a one-way deal where we get the better of it, right? Then he did
Yep.
the same thing with China. It was a one-way deal. You pay 20 and we pay 5 or 10 or something like that. I think it was even higher than 20, 30, 35 and 10 or something. One-way deal. And then Japan, who's been negotiating behind the scenes, keeps hinting that no, we're not doing this one way BS, right? They've hinted that this negotiation that Trump's trying to push down our throat. No, 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 we're not doing that. And so that's the reason why these letters are going out to South Korea and Japan. They've been trying to negotiate. They've been trying to negotiate behind the scenes since April, right? April, May, June, 3 months they've been trying, and they haven't gotten to first base with either of those two countries because Trump's trying to do a one-way trade deal. And they're saying, no, we're not doing one-way trade deals. That's not how we operate.
Yep. Well,
Trump's.
you and I have been talking about Liberation Day for pretty much every episode we've recorded since then,
Yep.
and we've agreed that this is going to last for months. And here it is, right? Here we are, 13 weeks later, still in the news, front and center. This is not going away. This is going to be a constant theme through 2025 and maybe into next year until Trump gets what he wants. This is not him backing down. This is, like you said, announcing something in April, the market having a shock wave, sending a shock wave through the markets. And now we're one by one going through these different countries and addressing um, how we come to a middle ground, which I don't really see happening in many cases. This is more of a U.S. win, is what Trump wants. This is not a negotiation in his view.
Right. And the key thing, and this is what, it's amazing. We don't have a mainstream media anymore. We don't have a financial press anymore. All we have is narratives out of Wall Street and Washington. So, and the people that are doing those narratives, it's all spin. So nobody's really talking about kind of what's happening, except for on like podcasts. You got to go to a podcast to kind of find out what the heck's going on, like ours or, Luke Groman's and, Andy Sheckman's. You got to go out there and find the truth somewhere else. You're not going to find it in the mainstream media. It's all spin, spin, spin. The BBB, I mean, it's a $2 trillion ongoing deficit, which puts a lot of pressure on the bond market. And we're paying a $1 trillion in interest, and it's not going down. It's staying there. It's putting a lot of pressure on the markets. And Triffin's dilemma is unfolding before our eyes. It's becoming very obvious that Triffin basically said that you're going to destroy your economy if you try to have the reserve currency, and that's what's happening. And everybody seems to think in Wall Street, because they're living quarter to quarter, and they're talking their book. And if you don't talk your book, you're going to be ostracized. You better get with the team, right? You better jump on the team wagon. The CEO basically, we've seen this, from the CEO down, they set the spin rate. They set the spin, right? They declare this is how our company is going to present our image, right? It's all spin. And that same thing happens in the financial world as well. They're going to have a certain narrative that they want to present to the public. They're selling a product here. They're selling a short-term product. They just want to keep the money flowing in this quarter. They don't sell a product 12 months down the road. And the one thing about these tariffs that, like I said, that the mainstream media and Wall Street is really ignoring is this underlying weakness in the economy that started, when the dot-com bubble popped in 2000. The U.S. economy, they talk about how we are the dominant economy. Well, the reason we are the dominant economy is because we've been using all this debt to prop ourselves up. It's U.S. dominance, not U.S. dominance. If we didn't have a $2 trillion deficit, we'd have no growth. So much for U.S. dominance, because Triffin's dilemma has hollowed us out. And so, the point that I'm trying to get to, because I think it's the heart of the whole matter, is that we can't afford these tariffs. That these tariffs are literally going. It's like the final straw. The house of cards. I like to say. It's We're getting really, really close. The straw that breaks the camel's back. All these metaphors, we're getting really, really close to where this whole debt bubble, this everything bubble, von Mises bubble, all this stuff is getting really, really close to falling down. I heard the market sniper, and I agree with him completely. He said that this is it. We're there. This is when it all goes down. We are not going to have a normal business cycle here. When this recession hits, all of this interrelated debt leverage is all going to start creating problems, and there's not going to be solutions. It's just we're on the very precipice of it, and these tariffs are literally the pin that pops the bubble, in my opinion.
Okay. So let's go and pivot a little bit here. I spent a lot of time in the critical minerals world. There's a project out there in the tungsten space called Alante Resources. which has been on an absolute tear. I believe they changed their symbol today because my screen went blank, and I had no time to even research what their new ticker is. But if you look up Almonty, it's spelled Almonty. And what I've been hearing from Tungsten peers is that their onboarding of their South Korea project is going to create a lot of supply in tungsten, which I totally disagree with. And now you look at what's happening, right? This is why we're not positioned in that stock, and we are positioned in American tungsten and in Guardian Metal Resources, which are two American tungsten plays, because we are so far behind China in the tungsten race that this is another reason why you have to be careful of jurisdiction, everyone. I'm not saying Almonty is a bad stock, but I am saying it is overvalued versus the peer group. And now, if you're talking about a 25% levy on everything South Korea, watch out. Like this is the kind of stuff you have to do your homework on. And I literally was on Kitco, Don, this weekend. I recorded at the evening of the 3rd and it went live on the 4th. And I talked about this very thing. I didn't say like, Almonty's at risk, but I said we've avoided that in favor of things like Guardian GMTLF and American Tungsten DEMRF because they're in Nevada and Idaho respectively. And I don't have to worry at night about my jurisdictional pick, if you will, right? Let's talk a little bit about gold. Gold stocks are really starting to catch fire here. Some of these juniors are really starting to move, Don, and two that are just starting to get going that you and I have highlighted on our show before are Next Gold, NXGCF, which I know made your top 50 list, maybe your top 25. I have to go back and look. I read a lot of your stuff. But the other one was 1911 Gold, which is AUMBF. I just talked to Sean today. Everything is on track there for them to move forward with the drilling plan later this summer. I think they'll probably have that news out in August. So here we are in July, and the stock is starting to move up. What do you think about those two names since we interviewed those CEOs?
Yeah, they're both in my top 25. I love development. So the two places I like to invest is in producers and developers because I just think you can get an edge. The only edge you need for a producer is it's a strong project, good margins, long life, good location. All you need is, and then once you have that package together, that you have those characteristics, all you need is higher gold prices and you have an edge. And then in the development story, you can have a very powerful edge. All they have to do, and we're going to talk to Marc Levy today at Norsemont, it's one of those, what I say you have an edge, is that all they need to do is tell us that they have a plan to go from A, B, C, D, E to get into production. So all they have to do is do these steps. They do the steps, they build a mine, and it gets re-rated and you make a bunch of money. I love that, and I feel like you get a really big edge on that. So 1911 and Next Gold, I've loved these stocks for a long time because I feel you have a really strong edge. 1911, all they have to do is put their mine back in production, the True North mine. So they have a mill, so it's a low capex. It's a short period of time to get it restarted. Probably will take about 2 years, but in mining, that's a very short period of time. It's right. Cheap, huge leverage. Those are the stories I love. And the Next Gold is, perhaps one of my favorite development stories because they have two projects, not one, and you get two for the price of one. I mean, the valuation, you make money just on one of the two projects. So the Goldsboro project, I think it's in Nova Scotia, and then the other project, I should know it, I think is in Ontario. So they're both in good locations. Goliath, I think is the name. Both of those projects are 3 million ounce projects in Canada development. I mean, those are rare. Big development projects in Canada are rare and it's cheap. And the reason why it's cheap is because we've had this 10-year of bad sentiment and nobody will buy these things. I mean, when you look at Norsemont's valuation day, you'll see exactly what I mean by nobody will buy these things. And the one thing about these development projects is they tend to break your heart, and people have been disappointed so many times that they're apprehensive of and nobody has a long time frame. In a development project, you need to think 2 to 3 to 4 years. Call it 2 to 4. You need to think 2 to 4 years, and most people just don't have that bandwidth. Well, bandwidth's not the right word, but they don't want to put their money down today and then not be able to get it back for 2, 3, 4 years. It's a tough thing. And people don't, it's like when you invest in these development stories, a lot of times they won't do nothing for 12, 18, 24 months. They won't do nothing. And then then they become a rocket ship once they get close to production. So
Yeah.
yeah, I love those two names.
I think that is a very apt way to explain both Next Gold and 1911 and what you just said, because their news flow year to date in a hot gold market hasn't been wonderful for either company in terms of regular news flow, right? The news that they put out has been positive, and they've both been able to raise money at higher valuations and in good chunks, which is great. So they're both cashed up. But of the two, I mean, Next Gold has a billionaire backer now, which we failed to mention, which is Frank Giustra. Frank Giustra, I think, has been the Eric Sprott of this kind of round, where he Eric in past rallies.
You're missing one, John. I got to interrupt you. Eric Sprott's in 1911.
Oh well, yeah, you're right. But Frank Giustra was a new investor, is what I meant in Next Gold.
Okay.
1911's had Eric there, but I think that Frank is, when you look at what he did with Argenta Silver, when you look at what he did with Next Metals, which is the old Premium Resources, he's getting his hand in a lot of different projects right now, and he's not making it. He's not being quiet about it, right? He's literally putting his chips in, and I love to see that from people like him and Eric and Rob McEwen. And I mean, these guys are Rick Rule. I mean, a lot of these guys are the reason where our sector is doing as well as it is doing, because they were able to throw lifelines to companies during difficult times. Let's be honest. I mean, even though gold was doing well in 23 and 24, a lot of these gold juniors were not doing well, and they had people step up to help them out. What I'm seeing now, Don, is a little different. There's a little company called Baru Gold that I've put a lot of money into. BARUF. I was buying it last year at a penny and a half. It's trading at 7.5 cents now. They're negotiating $100 million in Indonesia, like unbelievable dollar amounts, right? America's Gold and Silver, USAS. That company couldn't raise 20 million to save its life 2 years ago, and now it's just got $100 million check. Like these are not small numbers for junior companies, right? Like these are serious numbers. So I think that's the message to. And I said this on Kitco. My message to CEOs like Mark, who's coming on soon, or anyone, is don't sell cheaply. Like this is not the time to sell. When I saw Sandstorm sell today for a 17% premium, I'm like, what are you guys doing? Like this is, yes, your stock is at a 10-year high. Congratulations. But why the hell would you sell at 17% premium? Sell at a 40 or 50% premium and take care of shareholders, right? Like this is just mind-boggling.
Yeah, so I want to talk about, we're a little over, it's time for us to bring on Mark, but I wanted to talk about one company real quick here, and then we'll go to Mark. So today, Scotty Resources put out a news release, and I had them as an exploration company. And I think they were an exploration company because I've talked to the CEO. I like their CEO, Brad Rourke. I like him. But I didn't like it as an exploration play. But they're in British Columbia, high grade gold. Well, they have a lot of insiders, strong insiders. They didn't necessarily need to sell early, but they decided to pivot to production. This is a big story. So they have a market cap under 40 million. They got an offtake agreement, so they don't have to build a mill. And they got a loan for $25 million. I think it's probably 25 million Canadian because it's a Canadian company.
It is, yeah.
But I sent him an email immediately, and then he said, and then I called him and talked to him today to find out just a couple. I just had a couple of questions. Was, how long will it take you to permit it? So they're going to submit their permit in 27, and the permit should take less than a year because the mine's on care and maintenance. And so that's really good news. So they could basically, I think they could probably go into construction in 28, maybe construction in 29. So that's 5 years out, 4 to 5 years out, which hopefully is 4. But this stock could easily be a 5-bagger in 2 years easy before they get there because it's so cheap. Market cap under 40 million. So they have about 600,000 ounces of high grade gold, but it's going to increase. So basically what they did, which I think is very smart, is they basically found enough gold to start mining, and they, I don't know why they didn't kind of focus on development initially, I guess, but they pivoted. But they found once they found enough, they basically started doing the math, and they basically said, "Look at how cheap our stock is. I mean, they're valued under 40 million. They're going, we're under 40. We can't sell this thing. It's worth too much money. Selling's not really an option." So they're doing the same thing that Newfound Gold did. Newfound Gold was basically an exploration company, but it got so cheap, the market cap got so cheap they couldn't sell it. And the market's not valuing gold in the ground anywhere close to what it's supposed to be valued at. So like we can't sell this thing. So if we just drill, we're kind of wasting our time. So we got to pivot to development. And I've been saying this is the best way to get shareholders, to pay for, give them value. So Newfound Gold pivoted to production, and now Scotty is going to pivot to production. This is a really important story, and the market didn't get it. I mean, the stock share went up 25% today, and I think it went up 5%. The market didn't get it. They got a $25 million loan. They got an offtake agreement. So I asked them 2 questions. I asked, okay, how long will it take you to get this thing permitted, and then how much is it going to cost you to do it? And he said very little. So that 25 million is by far the bulk of what they need. They're going to need less than that to get this thing into production over the next 3 years. But if their share price goes up, their market price goes up, they might raise more money to drill. I mean, that always happens, of course. But this is a very cheap development story with strong insiders. This is the kind of story where I say you have an edge. All they have to do is go A, B, C, D, take it to production, and this thing goes from 40 million to say 800 million, 500 million to 800 million, and then I valued it as a 17 bagger with very little added resources. So I love those stories. If I can find as many cheap producers I can find, and as many development stories with 10 plus bagger potential with a good check boxes, I'm all over it. So I'm going to buy Scotty tomorrow morning.
I saw the same potential, and I invited Brad in March to my Four Seasons Top Shelf conference in Fort Lauderdale that you spoke at last year, Don. So Brad was gracious enough to attend that, and got in front of some really good clients in May. So yeah, I think that is one of those stories that's flying under the radar. There's so many of these gold stories and silver stories that are flying under the radar, but I think we should leave it there.
Let's have him.
Now.
Yeah, let's have him on the show. By the way.
Yeah, we'll try. And with that, why don't we introduce Marc Levy here, who is the CEO of Norsemont Mining. Marc and I just had the opportunity to talk last week for the first time, and really good story here. So Marc's just coming on camera right now. Boom, there he is. Marc, how are you today?
I'm good, thank you. How are you doing?
Yeah, welcome, Marc. Good to see you.
Nice to see you guys again.
Likewise. So, Marc, why don't you give us a 10 to 12-minute overview of Norsemont, and then Don and I will ask some questions.
Sure. Yeah. So, Norsemont, we own the Choquelimpie Gold Project in northern Chile. And as you know, Chile recently came out with some really big news last week talking about timelines being shortened by 70% on permitting. So, which is pretty important in our aspect.
Sure.
It's a former producer. We've inherited a large infrastructure. We've got a 3,000 ton a day mill. We've got a ADR effluent plant. We got a camp. We got backup generators, road and power right to our project, as well as enough water. We've got 4 wells, of which only 1 gets used for advancing the project. So we've got a full infrastructure, which would allow for fast track towards production. We put out a resource estimate of 2.18 million ounces, gold equivalent ounces indicated, and another 557,000 ounces of inferred. So about 2.74 million ounces gold equivalent. So that was our initial resource. Projects had about 140,000 meters of drilling down to about 70 meters. So everything is at surface here. And the structure, through some of the drilling we did, we've proven it goes down about 300 meters. So we're targeting to increase that resource through drilling down to 300-meter range, and hopefully targeting, a 7.5 plus million ounce deposit globally. 80% of that is sulfides, is the balance 20% is oxides, and that's an important part of our story. We've got 210,000 ounces sitting in our dumps ready to be leached, and we have another 350,000 plus ounces behind it in oxides that we can process and continue the leaching process. So we are going to be walking down that game plan to get to a production scenario. We estimate we can get there within 2 years, and that's been the estimate that we've been sticking to for the last year or so. Obviously, with the news out of Chile, which has been very exciting about the reduction in timelines, that may help us get to our goal on a production scenario a lot sooner. We've identified a lot more oxide mineralization at surface that we do intend to expedite a drill program this year and delineate more oxides. We feel we can get the oxide resource well over 1 million ounces here, which would create a much larger scenario for the production side. And we also have a copper porphyry that we want to go back and test as well, and punch 2-3 holes this year to see if the copper porphyry potential exists. That's our blue sky part of the project, which is the engine that likely drove all the gold silver to surface that we have in our project. And we've got a lot of high grade mineralization. We've got 35-meter holes of 32.2 grams of gold, 8 grams of silver. We've got 120. We've got 150-meter holes of 4 grams of gold with 200 grams of silver. So there's a lot of higher grade mineralization that we want to target and try and upgrade the overall size of the deposit. At the same time, marching towards production scenario. We have Chile being a tier 1 jurisdiction. We've got very unique tax benefits. We're in northern Chile, which is economically depressed. So we've got a 30% tax credit on infrastructure that we invest in. We're in a duty-free zone. And basically, we've got Michael Thiel, one of the members of our team, is an engineer on our board. And he helped turn around Los Bronces, which is a very large project in Chile that was very problematic and doing really well now. And he was also drilling the first hole for Esperanza, which is been put into production within 6 years from drilling the first hole, 2.7 billion capex, and doing obviously very well. So both projects in Chile. And Michael has a lot of experience, obviously, putting projects into production. We have him on our board. We have also David Lang, who actually had previously put this production for Shell, put Choquelimpie into production. So he's on our team. He came out publicly on an interview we did, I think, together in 2022, I believe, where he stated we inherited 175 million of infrastructure. So that's pretty interesting. And then you look at what our drilling value would be worth. We've got $50 million of drilling done, and we've invested, over 25, 26 million into the project. And we're sitting probably less than $10 an ounce in the ground valuation here. So we're one of the lower end of the spectrum, I guess, on valuations for the project we have. And definitely, you look at other projects way ahead of us, like Rio 2, which is an excellent project in Chile. And I think their market cap about a month ago was, I was quoting about 40 million, but I think their stock went from 80 cents to $1.60 because they've got the financing already in hand to permit and put their project into production. So, they're 2 steps ahead of us, but it shows you where the potential for Norsemont can be with our project is to catch up to them and be, trading at a $500 million plus market cap. So got a very unique situation, great team, good structure. We're starting to get out there and tell the story, and we appreciate being able to talk to you guys out there and tell our story.
That's great, Mark. Well, it's unusual that CEO stays on time when I say 10 to 12 minutes. So thank you for
Yeah,
Try to
that.
keep it short and sweet.
you
I could
actually
talk a lot, but I'm
you
passionate
actually
about our
came in
project.
under 10 minutes. So we're going to give you more kudos for that. So let me start off, if you don't mind, Don. I follow Rio pretty closely. I think it's worth pointing out that that stock was in the tank. If you take a look at a chart of RIOFF, it was not as pretty as it looks today. Look at a 3 or 5 year chart. And so this is what you need to be doing as an investor is see the opportunity. And when you have changes to regimes and or messaging within a country like Chile, like it's worth noting because we saw this with Argentina last year, right? I own AberSilver, ABBRF. Yeah, that stock was half the price it is today just last year before the regime came in and made changes that were more positive to miners. And so this is the kind of stuff that's exciting for you. Have you seen much of from your loyal investor base? Have you seen much of a change in sentiment over the last 3 to 5 business days since the news came out? Or
Yeah, we've had a lot of people reach out to me. I mean, Chile, the regime is pretty good, to be very honest with you. We've had really good support from the government from the beginning. I think because of the area we're in, we're kind of the only game in town to create economic prosperity for the town. We have the town on side, the landowner on side, government's always been on side. But definitely a lot of people noticed the change with the news that came out last week. There were some, I guess, concerned investors or potential investors about timelines for permitting. So this kind of answers their question even
yep.
in a better light, right, from the government directly.
So we're not going to hold you to this, but you had just stated that it might take about 2 years or so to get to production. Given the new news here, I mean, how much could you say you could chop off? Obviously not 70%, but are you looking at 6 months, 3 months? Like what do you think in your view since you've been in this jurisdiction for a while?
Yeah, I think, for us, the situation is we're still operating under the old regime and our own beliefs because that news just hit. So we have to do a couple of years of environmental impact studies, which we started to do, and then we had stopped. So we're trying to see whether we can use that data and fast track things. And under the new regime, we may be able to say, "Hey, we did a year of work, and you have to do two. So can we add that year plus the next year of these basic environmental studies?" So that's where I don't know the answer to that yet because this just kicked in. So we're kind of sticking to our guns with the 2 year time horizon, which, as Don said earlier, 2 years to production is a very short term situation. And you look at what we have in our dumps and the amount of capex we need is very minimal compared to what the cash returns could be in this given market. We've done some back of the envelope scoping studies with Capus Cassidy, who did the work for Shell on this initially, and they're a very well-known group out of Reno. And basically, it's an earth-moving exercise. So there's about 65 million of capex, including closure costs, and you'd be looking at about a $400 million profit using $2,500 gold. And obviously, we're well beyond that. So if you do the math, it's not hard to figure out you're north of 500, and that's just on the first 200,000 ounces. That doesn't include the other 350 that we have existing, and then behind it, we're pretty confident we can delineate another 1,000,000 ounces and get ourselves to 1.5 million ounces of oxides and keep that production process going for a much longer time period and a bigger return. And we do have the 3,000 ton a day mill on site, which we obviously would want to upgrade over time to increase capacity. But yeah, we're in a very unique situation. And, I think a project that has the opportunity to be in production in a hot gold market right now where gold's north of 3,000 and heading towards 4,000 maybe next year, it'd be nice to be in a production scenario and cash flowing. So I think we'll be able to do it as quick as possible, really is all I can say for now.
Okay. And lastly, what is the all-in sustaining cost per ounce, and what would you say would be the estimated capex for getting those 210,000 ounces plus maybe the 350 you mentioned?
Yeah, so we are going to be doing a pre-feasibility study this year and be a little bit more detailed and more robust with more accurate numbers. But from the scoping study we have, that 65 million capex is mainly, conveyor belts to move 11 stockpiles around onto the leach pads, and that would definitely take care of the 210,000 ounces. And then in our, we're getting an engineering report done this year and in short order here this summer on what needs to be done to the mill to upgrade it, but it's small money. We're talking about, like, I think we acquired this and someone gave a thumbs up of $1 million, and that was, pre inflation, we'll call it. So, maybe a couple $1,000,000 to, $2-3 million, which is obviously if we can create $400-500 million, $2-3 million is not going to get in our way of getting the plant up and running, and then taking that other 357,000 ounces out of the ground and crushing it and leaching it, and then obviously delineating. We've defined a lot of high grade zones of 10 gram, 5 gram oxide material, which would definitely make a huge difference as well. So,
okay, great. Thank you.
That's our view on the capex side of the equation here. And we would do that with debt, obviously, not with equity.
So the whole 65 plus debt?
Yeah. Yeah, we've been approached by some gold funds that were interested in forward buying gold. So if we can do a deal with some funds to get that type of cash, that would help reduce the debt and, be that component. Typically, you're at a 70-30 debt to equity ratio. But in that case, if we forward sell enough gold, 4,000, 5,000 ounces and pull in 10, 15 million, and then the rest, we use a debt strategy. The payback's pretty fast on the project, right?
Yep. Okay. Thank you.
Yeah, he also asked you about the AISC. Would be around 1,200 for the oxides.
So the all-in sustaining costs, I don't know the exact numbers because we haven't done a study on it, but the first 210,000 ounces, because they've been previously processed, would be probably a lot less than that, would be my comment. The next set, the other 350,000 ounces that require processing and crushing, is going to be a lot more costly. So, somewhere in the vicinity of $1,000 an ounce is kind of the number that's being used in Chile by some other projects.
Anything under 1,400 is fairly cheap today, because we have, when you're at $3,000 gold, if you got an AISC of 1,400, you have $1,000 margin. So the margins are really big today, and I think they'll stay big. But I mean, it wasn't too long ago when we were seeing margins of $500.
Yeah.
Now, a year and a half ago, we're seeing margins of 500. Now we're seeing margins of 1,000, 1,500. So the margins on this project are going to be really solid. So I want to mention that. Okay.
And we have a tax benefit, right? We have a 30% tax credit on the infrastructure, and we also are in duty-free zone. So we may have some additional, returns or IRR on this thing because of the tax advantages we have.
One thing that, that you want to look for in development projects is you want to look for projects that have really good economics. They're going to have real good cash flow, and this one does. Now, I talked to Marc. The thing that got me interested in Norsemont is they released an updated resource, and it came out at 2.7 million. That's a lot. So I looked at it, I said, whoa, 2.7. Then I went and looked at their market cap, and it was in their 20s, or maybe high 20s, low 30s. I think it was in the high 20s. And their market cap was $5 million last September, 5 million. And then now they released this resource, and now it's up to 41. But 41 is still cheap. But I mean, that's how much this thing is ripped, from 5 to 41. So you can see, I mean, people that were buying this thing down at between 5 and 30. I actually bought it when it was about 28. But anybody that bought it, But the thing is, I love the story. I love all the how it checks everything, all the check boxes. Is I always try to teach people on these development stories. You want to make sure they check all the boxes, and this story does. But the one thing that really got me excited about this project, and Marc, I want you to talk about this, is your background. Marc has been. I like to invest in people that have been perennially successful. Like Kimberly was the same. Kimberly, who we interviewed last time, She was an entrepreneur at 18 years old. She started her own business and sold it for $3 million, and she did it on her own. I mean, it kind of blew me away. And then she kept starting new businesses over and everything. She's basically been perennially successful. Marc is identical to her. So tell us about your background, Marc. I mean, it's just one success story after another.
Sure. Yeah, I got involved in the resource sector back in 2003. Assembled, what I call a world-class team of guys because I was new to the industry. So I targeted all high-profile guys, and we ended up getting a deal and doing a deal with Mitsui and Rio Tinto to acquire a copper project called Constancia in Peru. We advanced that copper porphyry and de-risked it. It was a 5-cent stock when I took control of the vehicle, which was, a dead company. And we ended up selling the company for $5 a share for $520 million to Hudbay in 2011. And while I ran the company and had a lot of good financial backers, I actually found a company that I really like called Petaquilla Minerals. And I tried to acquire them because they had a similar asset, but they were trading, we had a good $4 stock and their stock price was like 50 cents, but we had a similar sized copper asset. And tried to make some overtures, but they didn't bite. So what I did is I took control of a fund that was their largest shareholder and bought a position and became one of the largest shareholders and basically said, okay, we're putting my CFO on the board, my president on the board, my lawyer as your corporate secretary. You could still run this thing and I'll manage, they started to trust me because I control the biggest block of stock and they knew I wasn't a seller. Like I'm a guy who wants to exit the company at the end. And sell it. And we ended up exiting that to Inmet for $357 million. So it did very well for me personally and my family, and two of our big funds out of Panama and Boston that were backing Norsemont as well and this. And we've also had an exit in the coal sector, Coal Hunter, $57 million, Rio Silver. So we've had about 4 public companies silver exits. I also was the founder of a payment processor because I came from the tech space that we exited as well about 2019. And I'm also one of the co-founders of a large cannabis company that most Canadians know called Aurora Cannabis, which I think is now the #1 company in Germany and Canada, which it was a $16 billion success. Now it's probably sitting below $1 billion now approximately, but they're doing really well. And so we've created a lot of success for our investors. And I'm a guy that believes in putting my money where my mouth is. I participate in every round of funding. Our family, I didn't mention earlier, has invested about $9 million into the project. So I think we just saw break even this month on our investment, and we're not here to break even, obviously. But even our team, I think one of our board members actually last week, I was told, just recently bought 30,000 shares at 50 cents at, near our all-time high. So, our management team has put money in at much higher prices. They came in at 75 cents, $1, $1.60. I believe everybody needs to have skin in the game and be aligned with our shareholders. And, that's been my philosophy from day one.
Beautiful answer. So you guys can see what I mean by this guy's been perennially successful. I mean, so him and his family own 28% of this company. So he's betting big on Norsemont, and everything he's done's been successful. So I got a really good feeling about it. Plus, the board owns another 10%, so that takes it to 38. And then he has another 10% high net worth people. So 50%, about 50% of this company is held by very strong hands. So they're not selling. So if somebody comes in there and wants to steal it, they're not stealing it. That's what Marc does. Marc steals companies. They don't steal them from him.
I'd like to.
All right. So the next question, actually, I already covered it about I wrote these down, my questions. The cash and the debt situation. So currently, you have very little debt, but you have very, very little cash. So what's your cash debt situation, and how are you going to raise some cash in the near term?
Yeah, so we've got under $1 million in cash. Some of the debt that's on the books is pretty friendly debt. It's to myself and some of our management team that had put in a dollar round of funding on a convertible debenture that will roll into any new funding that transpires. We're in a unique situation that I guess I haven't seen for the last 4 years, seeing that this market's been so brutal and nobody could raise any money in this market. We're being approached by some really nice strategic investors that are approaching us to invest in the company from an equity basis, and some investors that we're talking to right now on a gold convertible basis, meaning that we deliver on production in 3 years. 2,000 ounces at $2,500 an ounce, and they provide us $5 million. So it's way better than any royalty deal we could do. We are talking to silver streamer as well, because if we can kind of give up the silver and get a bunch of capex and capital without dilution, that could be a strategy as well that we're looking at. So we'd like to do things that are non-dilution, but also strategic. We don't do a lot of retail funding. As you said earlier, Don, I could probably name a dozen guys that own between 1% and 5% of the company. Some of them are people that run companies that you guys like and know of. We've got a lot of well-heeled mining investors that are longer-term guys that came into our project at a plus $1 range, and they've been averaging down since as well. So any financing we're going to do generally will be a strategic funding is kind of what we're trying to approach it with.
And your debt's under $1 million, right?
I think we're sitting north of $1 million of debt. There is some debt that just recently got settled. So it's not reflected in our financials. And then we have, I guess within the team, there's a big chunk of debt that'll get rolled into whatever happens next from a funding perspective. So I think after our next funding, the debt stack will be done.
I only have two more questions. Next one is the build time. So after you get your permits and your financing, how long will it take you to build it and get into production?
Yeah, so the initial getting the dumps into production, which is the first step, we were estimating a 2-year time frame for that, and that's just because the typical sampling of the groundwater, sampling of the ground, and the environmental impact assessment takes that time. We've done a year worth of work, except there's been a lag, so we're not sure whether that would be usable or not, even though logically it'd be, hey, 3 years ago we did a year and now we do a year. That's even a better sampling of the ground and the water and everything else environmentally. So we're going to see how this new regime looks upon that, or do we have to start from scratch and do 2 years? And that's kind of why we're sticking to that 2 years.
Yeah, I framed the question incorrectly.
Sorry.
How long will it take you to build it after you get permits and financing? 3 months?
I think that we would start to build this because it's not.
Let me interrupt. The reason why I ask is that you'll get re-rated higher so people are going to wait until you get your permit. That's how it generally works. They're going to wait till it's completely de-risked and you're construction ready. And when you get construction ready, if you're from that point to actual production is very short, you're going to get re-rated really fast. I mean, your stock will double. It's like you're going to go out there with a news release and say, okay, we got our permitting, we're going to start construction, we're going to start production in 6 months. That's my question to you.
Yeah, no, it'll be very quickly because what we're doing is it's all conveyor belts. This is not any specialty machinery. It's all basic stuff. And installing it is it's more of an earth moving exercise. So these are not complicated engineering. This is really basic.
Yeah, that's the point I wanted to get across. It's going to be about 3 months, right?
Oh, it'll be very quick. Yes.
Yeah, that's really, I mean, that's very powerful. I mean, most companies, it's at least 12 months and usually 18.
Right.
So you're 3. And so that's a big thing. Okay, my last question is your valuation. So I'm valuing you as a 20 bagger at only 60,000 ounces. So 60,000 ounces of production is not that much for 2.7 million. And so I'm basically just valuing like 2 million ounces, 60,000, which I think is very conservative. But you have only drilled to 70 meters, and your geologists are confident that it's mineralized to 300 meters, and that you're going to grow this thing potentially to 7 million ounces. So if we get to 3 million ounces, your production goes to, I have you 100,000 ounces. And if you get to 4 million ounces, it goes to 120. At 120, you double your upside. So you go from a 20 bagger to a 40 bagger just by getting to 120,000 ounces of production. It's pretty rare for me. So I usually can find 10 baggers that are pretty solid, but it's very rare to find a 20 bagger that's solid. And believe it or not, you are. So how do you reply to my valuation, my future valuation of your company?
Well, twofold. Why does my family have $9 million in here? Because we believe we can make 20 times our money. So that's just from a personal investment perspective. And we've paid dearly for the stock. A lot of guys say they own a certain percentage of the company and they were given the stock, but we've paid through the nose for the stock. And realistically, from a geological perspective, we're a high sulfidation epithermal system. Every geologist knows these typically go down 200-300 meters. We did a drill hole number 9 that went down 300 meters, and we actually encountered really high grades at the bottom. But we've pulled out, close to 200 meters of a 1.5 grams, 2 gram material, which is really nice at surface. A lot of our drill holes, as I mentioned, go down 70 meters on average. We have 35 meters and 32 meters of 35 and 32 grams of gold. And I'm even throwing the silver into the garbage right here, but there's some silver in there as well, discounting things. So we're pretty confident geologically and technically. And, we've talked about publicly targeting 7.5 to 9 million ounces. That's not a promote number, because the promote number internally is probably even higher. That's a realistic number based on all the data we have, based on drilling that we've done as well. So we believe we can delineate a much larger project. And obviously, there's a magic number in our business today of a project with 5 million ounces gets the attention of the majors. They start knocking on your doors. So while we're moving towards production, obviously we're going to produce. The one good thing about our story, I guess, Don, we're not going to be a boring story for 2 years, because we're going to be drilling, delineating, and adding ounces and getting the attention of bigger and better companies out there when they start seeing us cross 3, 4, and 5 million ounces.
You're not for sale, Mark. I don't even know why you mentioned that.
Well, because we want to get the valuation going and get the market to the best price point. And everything has a price, but obviously getting the production is the best, is the holy grail here.
Right. The market's going to value you based on your cash flow, your free cash flow, right? And it's going to be valued on a market basis. So the worst case, you're going to have a free cash flow multiple of somewhere between 3 and 5, which will be just pathetic, right? You'll get valued. I mean, 3 will be about the worst you could do with those margins. With those margins, 3 is going to be absolute worst. But the odds are you're going to be above 10. So and then you start throwing the numbers on it, and you're not for sale. Okay. So I said I was done, but I always tend to, something pops in my head. You have a potential copper on this property. Why not JV it out and get some instant cash? So it's like, okay, we'll do an 80-20 deal. You guys going to get 80%, but you got to give me cash up front to get that 80%. Why don't you do that? You don't need that.
No.
This project, your gold's a 50 bagger already. So what about the copper?
I don't know if I want to talk about the copper. I might scare you a little, but we are in monster territory for copper porphyries. We're all along that Peruvian and Chilean copper belt, where I've operated previously in Peru. In our last drill hole, we hit some pretty crazy 6 and 9 meter intervals of 3, 4, 5 grams of gold with 50 to 100 grams of silver and 1% copper. So, that's pretty incredible. Definitely one of the plans would be to do a couple of holes into the copper porphyry area to give it the potential for size. And we've been knocked on the door by a couple of majors in the area. It's maybe a little too soon, but once we drill a few holes in it and get a better sense for potential size, yeah, we would look to do something and either A, create an exit for our shareholders on the copper side to a bigger entity, or B, like you said, let's do a strategic JV where you guys take it to a feasibility and carry us right through to production and be partnered with a BHP type of a company, right?
Well, yeah, the one thing that investors get really excited about is a strong path to production. And so the more cash you have in your balance sheet, the more investors like that. And this is one way to throw a bunch of cash in your balance sheet. So I just want to throw it
I
out
know
there.
for sure. That's definitely a thought. Obviously, I'm a copper expert. That's where my heart and knowledge is. And I feel we have something really substantial, and it's going to attract a major for us. Guarantee. We've had knocks on the door already. It's just too early. I'm not a guy that likes to sell too soon, just as you know already. I want to fully value things before I give it up, and I think there's an opportunity for us on the copper side. It's pretty typical to see a copper porphyry engine driving this gold mineralization to surface, and that was the original thesis of Rio Tinto that had optioned this, and Copec and Shell.
Right. Just one final. I mean, Chuck's been on this podcast. If there's something that Chuck that you wanted to say that we didn't talk about, you can ask that. You can say it.
Thanks, Don. I think we've got, as Marc's laid out here, we've got a very clear path forward for production. As you've said, Don, the potential income from that alone will revalue us. It's staggering when I look at the numbers. What we have there is, and it's in my mind, it's very straightforward, the path. But as Marc also said, the potential upside of the copper is staggering. That could be $1 billion opportunity for us there. And right now the strategy is to put a couple extra holes there to refine it so that we can maximize shareholder value. If that's JVing off, that's what we'll do. But yeah, we've got an amazing team. Marc's done this before, and he's managed to pull together a team here to drive the whole thing forward to have another huge win for himself and the shareholders. Okay.
Thank you, Chuck. That was great.
You're welcome.
I'm done.
Great. All right. Well, Don, thanks for the great questions. And Marc, you did a great job of answering everything for us today. We'll post your US and Canadian tickers for everyone in the show notes for Norsemont Mining. And we look forward to having you on again, perhaps next year, to give us an update on how things are progressing.
Absolutely look forward to it. And thanks for all your time today, and appreciate all the questions.
Excellent.
Of course. Thanks, Marc. If you don't mind, we'll just do a little summary here for investors, and we'll talk to you soon, Marc.
Thanks.
So, Don, one thing I'll address right off the bat is on the copper side. I follow and own probably more copper than you do in terms of junior exposure, and what I see is kind of what Marc was alluding to, is that they want to put a few holes into this, probably so that they can show a Rio or a BHP the size, because these companies are not interested in little or even mid-sized plays. They're not going to hand out checks unless it's a sizable project. The cool thing is Marc followed that up and said, "Hey, I've got a lot of experience in copper in this exact part of the world." So I think they're holding that a little closer to the vest than most juniors.
Yeah. Yeah, he mentioned the copper when I talked to him before. They're very bullish on the copper potential on their property. They think there's definitely a copper mine there. It's just crazy how cheap it is. I mean, this thing's got 25, 30, 40 bagger, just the gold alone. And so the copper is just all extra, but yet the copper could be worth more than the gold.
Right. So, yeah. Well, copper's in a serious uptrend right now. We made an all-time high in copper this year. We just broke $5 a pound again, like butter. 5 used to be that kind of line in the sand, like gold at 1575, right, where we couldn't break it forever, and now 5 is just breaking on copper like nothing.
Yeah.
And so it's a very bullish environment for these juniors that have copper exposure.
Yeah, this is a play. These are the kind of plays that I really get excited about, because when you look, usually when you analyze a development story, there's going to be a few areas that iffy. It might work, it might not work. And the big area that usually is the problem is financing the capex.
Yep.
And also financing getting to construction ready. You don't know how much money they're going to spend, how much they're going to dilute you, how they're going to finance it. Well, he said, we're not going to spend very much money from here till construction ready, which is only 2 years away. and we're going to finance this with all debt. I mean,
Yeah.
so the thing that usually adds risk is very low risk. So this is one of those ones where it should work. If it doesn't work, it's going to be a bit of a surprise. So it works at $3,000 gold, and it just gets better after that. I mean, so they should have an AISC around $1,000 for the leach, and then for the oxides, and then maybe 1,200-1,300 for the sulfides, which is still low. So it's not a high cost mine.
Yeah.
Exploration potential up the yin yang. I mean, they've only drilled to 70 meters. So high insiders. This is exactly what I look for.
Interesting. So the capex, you did mention 65 million, but as you pointed out, all debt, and that is very unusual because most of the companies we interview are 50-50, 65-35. They're not all debt. And then when we talked about the mill, that's a 3,000 TPD mill. So the refurbishment, he said max probably 2 to 3 million, which isn't bad. So yeah, short construction time period, very low capex, funded by mostly, if not all, debt, and 2 years away from production in a jurisdiction that's improving. So pretty exciting.
It's very exciting. Absolutely.
Yeah. Well, Don, we're going to leave it there because we went a little longer today on the front end, but I will see you soon for our next interview. This one's been with Norsemont Mining and Marc Levy. We really appreciate the support from all you guys listening. And I want to put in a shameless plug for Don and I. We just both got named as first day speakers at Beaver Creek in Colorado this year, September 9th. The conference is September 9th through 12th. But if you're interested in attending that, let me tell you, that conference started my consulting business 6 years ago. I literally was there speaking, had 3 CEOs like Mark come up to me and said, "Hey, you're really passionate about our sector. You should become a consultant for the mining space." And I quit my job over the weekend and started my consulting company with no clients on a Monday. So the energy at that conference is outstanding. And I think this year is going to be its best year ever. I mean, every hotel I see is sold out. I'm trying to make dinner reservations. They're like impossible. So I think we're going to see a lot of energy there September 9th through the 12th. And we hope you can see us there or somewhere else on the road. So
How do you get into that conference? I mean, I got in from Larry, but how do you get in the door?
it's referral only, really. I mean, like that's how I got in, was through a newsletter writer in 2019. But look, if you're an affluent client, all conferences want affluent accredited clients. They absolutely want that. So as long as you're not going to do 12 shots of tequila and make an ass of yourself, please email Don or myself, and we will, talk to you on the phone and see if your profile fits what they're looking for, and be happy to refer you. So, yeah, Don, it's going to be an exciting year for us. Great first half in the bag. I have 6 more months to my 10-year anniversary, and at that point, I'm going to throw myself a party. It has been a grind in the last couple of years, and this year's been a lot of fun so far. So we'll have our Q2 numbers out here probably in a few days, and perhaps we can talk about them once they're public.
Excellent. Okay, John. See you at the next one.
You got it, Don. Thanks for everything.